Hello traders. I'm going to start out with my weekend video. I'm going to start out with a macro view of where we're at and we'll go from there. Okay. Basically I'm using my Fib fans and I added some other levels to 78.5 and the 0.236 levels in addition to the three that are default with the toss. And basically we've come into the 78.5 Fib fan from this. Basically, I keep having to go out further in time. So this is our next critical level, and that's where we're at in relative to that. I think this week we're still going to have more down pressure coming down into the 2016 value volume point of control, the 2165 area for the ES futures. And I want to keep things in context here. I can do it on this one, I guess. If I duplicate my study and bring this out all the way down here to the 2009 lows, and I want to point out here on this study using that Fib fans, look, we are solidly above the midline on the primary uptrend for the S&Ps. So basically we've got to get all the way down to 2064 or even below the 2016 volume point of control for us to actually be threatening to go into bear market territory, breaking down the uptrend. Okay, so something to keep in mind. Everybody's got a different way to justify bull and bear markets. I don't even think we were into a bear market yet. I think we're still in a still well-established uptrend. We are in the and with just having a really nice reset in these markets. Okay. Now, I also want to point out here, right now, we have just tested the 21 SMA on the ES futures on our monthly. So basically, you know, all this sell-off here just brought us back into the 20 SMA, monthly 20 SMA. That just gives you an idea just how overbought we were in this market, and this was a really nice correction for the markets, healthy correction for the markets. So something to keep in mind going forward here in your trading, that scenario that we got going on here. Okay. Go over to our Qs real quick here on the weekly. Right here, right now, on our weekly, we are running into our 200 SMA on the weekly, catching a little bit of responsive buying. And we haven't given nearly as much back on our Qs versus our S&Ps or the Russell. And, you know, this was just a nice, healthy reset back into our 20 SMA on the Qs. Basically, the Qs are still, we look how long, we have not went under our 200 SMA all the way back to 2008. 2008 was the last time we broke below that, and we still haven't even done that yet for this massive sell-off in the markets. So something to keep in mind, on a grander scheme context, what's going on here in the markets. And if you look out on your monthly there, I don't think there's any monthly support to speak of. Yeah, you're still quite a ways away from all your MAs, even on your monthly. So, the Qs could come in quite a bit more, but Qs are really holding up pretty well on a relative basis on this sell-off. Okay. The Russell's a different story. This is a beast of a different color, in my opinion. This is basically, we've got a double bottom scenario going up here in the Russell, and I think this is a yearly value down here at the 90-20 area. I think that's the ultimate goal for for the Russell at the very least. And if you duplicate your Fib fan like I did on the darn it, let's duplicate. Sorry. Just draw this down here to the 2009 lows. This will give you a little bit of context. We have broken the midline on the 2009 uptrend. We did catch as soon as Wednesday this week, we put in pretty much a double bottom on and we did rally Even Friday, it was showing, even with the close, it was showing a little bit more relative strength. But this is the problem child in the markets. The whole everything going on in the oil industry. Unless, I mean, if Trump would come out and put some tariffs on oil, making sure to lock in $45 a barrel for U.S. producers, and put some money towards building out the refineries and stuff, I think we could save this scenario. Um, this is the real problem child in my opinion, and then plus the regional banks are really taking it on the chin. I think it was a big mistake lowering interest rates. I think they should have kept just pumping money into the economy and not had disrupted the whole interest rate side of the equation, in my opinion. I think disrupting the interest rates, you just gutted the financial system, and was a very bad decision, in my opinion. But everybody's got their opinions, so only time will tell how it all works out. Uh, but going to near 0% interest for these financials has just been outright devastating, and so that's a big problem that I'm seeing here. You go out in your weekly. I'm gonna have to go out on the whole 15-year thing here so we can see properly what's going on here, and you can see it's just absolutely destroying the financials, and so something to keep in watch here. Go ahead and put a new fib fan down here, all the way from back from the 2009 area, and this will give you an idea just how that's impacting your Russell uh, here. So basically, we have come right to that midline here on the financials versus the 2009 uptrend. So this is make or break time for our financials. If we do not start catching buying here and supporting prices for our financials, then we're in a whole bunch of trouble going forward here. So, considering this next week's going to have more downside pressure likely, that's a problem child looking forward into these markets, that the primary uptrend is about to break this week for our financials. So something to really keep in mind going forward in into this week's trading, the sheer risk that we're setting up here for our financial system, and that it could just completely unwind starting this week. And I added an additional trend line right here. As you can see where the floor is on the financials when we get into this zone, I do not think we've hit the floor. I think we are actually going to cross. We are going to be breaking the 2009 uptrend this week in the financials. So that just gives you a little bit of, where the markets seem to be heading. I do not think we're going to see a pop or a reversal in this market till next month. So or late this month or into next month before the markets might actually find some support. So lots of reasons to not be long going into this week. Quick review of some of the option activity there Friday. Basically, we had a short squeeze going on in the carnival with all the talk of a bailout for the airlines and the cruise line industry. Zoom video continues to be an outperformer going into for this quarter, with everybody being stuck at home and conferencing and stuff. They're having to do a lot of business conferencing for people working at home. They're having to do a lot of conferencing. Zoom video is very popular in that regard. People really don't like using Skype anymore. Zoom's what they prefer nowadays. Netflix was trying to outperform again yesterday. So another one to keep on your watch going forward, outperforming with everybody being stuck at home. On the put side, the above volume action, Disney was really kept taking it on the chin, and rightfully so. I mean, everything's getting shut down for Disney. I mean, so they can't make movies. All the theme parks are getting shut down, and with the exception of their streaming video, which really doesn't make that much money, they're just not doing very good at all. I traded Apple a few times Friday. But Apple, right there at the end of the day, if you had bought those lotto options the last 45 minutes, you could have made 12 times your money on some of those Disney. They dumped Disney just like last Friday. They dumped not Disney, Apple. They dumped Apple just like last Friday going into the close, and big money's rushing out of Apple at these price valuations. Obvious that there's some big sellers that are liquidating throughout the week, and right there at the end of every Friday, they're having a forced selling situation on Apple continuing, um, like we had last week. So some of these big fund managers, they're basing their sell orders on a weekly basis, and then when you get into Friday, obviously Apple is really out of favor right now. They are trying to get out of Apple as fast as possible. It's pretty darn obvious what's going on here. Surprisingly, Costco. Every time I see a big dip bot sell in Costco, I'm wanting to uh, look to initiate some longs in that one. Just something to keep on watch going forward here. Had a nice little dip on Costco. Their big problem is keeping stuff on the shelves. With everything being shut down, they may start running into supply issues like a lot of places going forward here. Especially the rumor is right now that first of the week the entire country is going to be shut down. So, um, well, I don't even think it's a rumor. I think it's a fact. There's a lot of professionals in the law enforcement industry that um, that have already been told that that situation is developing for the first of the week. So, something to keep in mind going forward here. They're taking this thing really serious. So, I'm going to leave a link at the bottom too. There's a video about, and it talks about the coronavirus a little bit better. Um, but yeah, it's a must see if you guys really haven't looked to see what's happening in Italy. And so it's very informative, something you guys should definitely watch. And then Caterpillar, which had gotten an upgrade earlier this week, is giving some of that back here into the end of day Friday. I can get this to close now. Okay. Some of my other scans. Okay. The 24-hour ETFs. Uh, your SPY. It looks like your SPYs and Qs. Some of these puts just modest gains for Friday. You have to keep in mind on these ETFs here, the implied volatilities are so jacked. It's hard to make really good returns anymore on these until that comes in. And as I said in my last video, I think volatility is going to be crashing down this week with the floor traders being shut down, and most of the analysts are going to be sitting at home on holiday. So I think it's going to be a lot less volatile week, and a lot of the gains for the week are probably going to be in the overnight sessions. It's going to be much more difficult to trade intraday this week, in my opinion. Okay, on the put side, no, on the call side. On the call side, on the ETFs, TLT was outperformer, so the bonds were outperforming as of Friday on the ETFs. Okay, and we come down here. Let me see if I can get this come down. If you just do a search on the Nasdaq itself, the calls, you had the Zoom video, Eno. There's something going on this next week on Eno. The options were quite active there Friday, so that's something to keep on watch going forward here. That they were really active, and then we had the short squeeze in the airlines again, so something going on there. Okay, and then on the put side for the Nasdaq, Apple. Look at this. Apple there at the close just got decimated. Okay. And I actually had traded the Nvidia puts, made some decent bank on Nvidia. That was my biggest winner for Friday, and it was just I just scalped a fraction of the move. So that really gets me a little upset. So Microsoft was showing a little bit of selling pressure into the close too. But yeah, it was Nvidia and Apple basically the two selling pressure. And Nvidia was way up earlier in the day. So it gave up. So Nvidia's really gave up quite on a comparative basis, gave up a lot more than what Apple did in the Friday session, in my opinion. And then if you look at your S&Ps, the put side, Disney got it. Disney got hammered hard on the S&Ps Friday. So something to keep on watch, plus your Apple, of course. Gilead was also on watch. I had called it out right as the options really started spiking, and boy, that would have been it was way up earlier in the day, and as you can see, the puts were up 40%. You're probably looking at closer to a 150% gain if you'd got whenever I had called it out in the rooms. So there was a lot of problems in the Gilead as well. They were trying to get out of the way for that. Um, okay, and then on the put call side for the S&Ps, not much going on the call side. Just Netflix, United Airlines. Those are the only things on the S&Ps really showing any positive gains Friday. Okay, so that gives you a rundown of the stuff that's going on Friday. Okay, here in an early hour session, it looks like the S&Ps have already started to recover a little bit. We were down almost 3%, I think, at the lows, a 2.5-3% area on the not the S&Ps, the Dow Jones. This is a website that actually tracks it, gets you a pretty good read even on Saturday of what price action is doing for the Dow Jones and give you an idea of how it's going to open Sunday. So it has improved a little bit as far as sentiment goes. So I think it actually tracks open orders that are pending open orders that are sitting in the queues, and that's how they track predict. It's a predictive algorithm of how markets are going to open. So something to keep and watch. We are looking to open lower Monday as of right now. So and we do have the automated trading hitting the markets. So I'm going to be very, very careful about trying to do reversal trends this week, realizing that the trading floor is going to be shut down and the algos are going to be ruling the roost all week long intraday. So something to keep in mind, reversion trades are quite dangerous this week. As I said in my prior video, I think we are coming off peak volatility in these markets. The uptrend has not broken yet. So that is something a major takeaway for this market. So I do think we'll probably be heightened. I do think we're getting closer. We're about a week out or so before we're going to start seeing some buying. Maybe later in the week, mid to later week, we might start seeing some buying coming back into the markets. But we're still a little bit early to actually be hitting the accelerator to the bullish side in these markets, in my opinion. Especially seeing what's happening in Apple in the late Friday sessions. That's something, that was Opex as well, and they were dumping Apple into Opex. So that is concerning to realize that they just absolutely do not want to touch Apple right now. For some reason, big money seems to be divesting out of Apple, in my opinion. Okay, one of the things that I really want to watch here, and that's our semiconductors. As you can see, this was the primary uptrend on the weekly standpoint for our semis. And basically, we had the rocket move higher on our semiconductors all the way up through here. This is our rocket move. And this was the bounce point. The 50% fib line was the bounce point that last time. And we're just now barely holding on to that 50% fib line on our semiconductors. So something to take away going forward here, what's going on here. This accelerated uptrend is completely disavowed at this point. So we have to go back to the breakout area. And really important to realize what's going on here with our semiconductors. We are bull bear potential for the semiconductors. And this would be quite possibly the next breakdown scenario for the markets going forward here. So something to keep in mind. We finished the quarter. We closed out Opex right here on the line. So basically, that's something, when you're closing out Opex, it's something to realize, how is money positioning themselves going into the next uh, expiration for these options. And this is a very important scenario to take a takeaway going into next week. Are they positioning themselves for a dip buy opportunity, or are they trying to sell the uh, continue selling pressure into the situation? And typically, even after the VIX pops, you're looking, like I said, 3-4 months before the final bottom is in a bear market scenario. So just keep that in mind. The Qs really have not come in that much on a relative basis to the other indices. But, we are in this chop zone. We've hit the low of this consolidation zone. So something, little things to take away here on our semiconductors. They are going to be a major driving force for the Qs going forward here. And they seem to be dumping Apple, so that is a FANG name, major player FANG name. They seem to want to be getting out of Apple as of Friday. So this to me would be the next logical area that's going to break down going into this week. Something to really take away going forward here in these markets. Now I can go through a lot of different charts and talk about them, but basically the tone that I've got going on here is, just fade the pops this week, at least at the beginning of the week, and I can go through a lot more charts and show you why. We were getting a lot of stuff on Disney there, so we'll look at that one real quick. Just absolutely getting rocked to pieces here. I mean, so you have to go all the way back to, man. Let's see here. Let me remove this real quick. But you know it. Nothing wants to work right whenever you want it to. It won't work. Absolutely getting rocked, I'm telling you. Okay, remove. It's not wanting to do it for me. Remove. I don't want it to do that. There it is. Okay, we've come down to that 50% fib on Disney. It was under a lot of selling pressure. So they were selling Disney into that fib line going to start the next quarter. So that to me is not a bullish sign at all for Disney. That basically all the bulls that were holding out hope going into Opex, they just got rocked going. So basically, right on the bull bear crossed on the uptrend, in my opinion, for Disney. It just seems like total liquidation for Disney, expecting further lower prices setting up here, in my opinion, for Disney. So, not the scenario that I would be looking for going into a new option period. Them selling Disney into support. So, something to take away going forward here on Disney. Okay, like the video if you like it, and please leave comments below. Like I said, I'm going to have a link below from ABC and about the coronavirus and stuff. Um, but so basically, that gives you just some takeaways here that we could be nearing some support areas here, but based on the price action Friday, uh, Apple and Disney, of course, especially those two are telling us that in my opinion, that further downside pressure is setting up this week. Okay, thanks a lot.